Hi, Dane Spots here. Hopefully you can hear me. If you can hear me, please somebody indicate in the chat room. We were having some problems with our audio and getting hooked up. So please let me know if you can hear me, and then I'll begin. Excellent. Okay. So let's begin our webinar here and have a quick discussion on the week's trades. For those of you that are still in the conference, that were attending the trade room meeting, you saw some of what we're about to talk about here. So what we're going to do is just go through the trades, and especially go through the last trades of today, and kind of see where we're at, and then we'll kind of go backwards to the first ones. If you have questions, there's a little chat dialog box up on your little control panel there. Just click on the chat button and you can ask any question you want. I'll stay as long as you need to stay, or as long as you have questions, and we'll go through these, and hopefully it will be of interest to everyone. So today's trades, we did Ruby Tuesday, which is this guy right here, and we did Price Smart, which is a Latin American version of a Costco. And so the first one, Ruby Tuesday, actually the first one to actually hit was Price Smart, and they announced immediately at close today, and it popped up about 3.5% right here, and then it went down, and then it settled right in here. They actually beat on the top line on sales and missed a little bit on the earnings side. We're still actually in this trade right now, and we expect it to resolve either at break even or a little bit above break even though some of you may have already gotten out of this particular trade. Let me put up my notes that we had on some of these. So we had originally a take profit of 6% on this one, and we had a stop loss of 5%. And as you know, for those of you that are in the trade room, part of one of the things that we do is we enter our trade prior to market close or just at market close, and then we take a close look at the actual release. And the three basic metrics that we're looking at is whether or not they beat expectations on the bottom line, which would be the earnings per share number, and those are posted on your jump report. Whether or not they beat on the top line, which is revenue or sales, and what their forward guidance looks like. I usually call it just the forward look. And so if the forward look is revised, and generally it is, but if it's revised upward, that stock is going to take off. It's going to probably go, and if we were already in a buy position, it's going to go long. So those are the three metrics that we generally always look at. Now the reason why Price Smart was interesting is because they pre-released last month a few of their numbers, I think in anticipation that it wasn't going to be quite as good. The stock was trading down prior to release. Their numbers actually weren't that bad, and so really all they released that would be any surprise to investors was just really the last month, the month of March. So we don't have really super high expectations, since they came pretty close to what expectations were, but this isn't a dog stock. This thing should not tank tomorrow unless the broad market is tanking. So Ruby Tuesday was an interesting one. They were already oversold a bit. Our data showed that it was going to be a down move, which in fact it was. We had a take profit of 8 to 10% as a prospective one. When they released, in addition to them missing on both the bottom and the top lines, and same store sales, which is another metric, was down, their CFO quit, which is not a good sign. So this thing tanked immediately about 16%, and it kept going down to about 20%. We're actually looking at a second potential trade here, even though the support levels really do show that this thing has got support right around the mark that it's at right now, which is about 440, 450 or something like that. This was an excellent trade for those of you that got in prior to close and shorted it at around the 520, 522 range. You more than made up for your nickel here on the subsequent drop on that one. So this was an excellent one. This is to be determined. And then yesterday we had two trades. We had Bed Bath & Beyond. Let me actually pull that one up because it's kind of an interesting one to look at. So we maximize that. So this one, Definitely they beat on both the top and the bottom line, and the third metric of forward guidance looked better than what anyone expected. In fact, all the analysts said that Bed Bath & Beyond was going to be a dog, and that it was going to, that their metrics were going to be lower than expectations, and that there was going to be a drag on their EPS. But in fact, it did the opposite, and that was what our trajectory analysis showed us. And so we went in long at market close at around 48.80, somewhere in that vicinity, and it popped up immediately to 53. Those of you that were in the trade room, we had a discussion about whether or not there was a second trade potential. I suggested not, just because overall the stock, even though they beat solidly, and normally I would say on most stocks to go in, but because it was retail and there was some broad market issues and what have you, my suggestion was not to go in for a second trade. And you can see today it popped up again a little bit. So had you gone in for a second trade right here, you'd have done well this morning on the just right after market open. But then look what happened. It actually went lower than it closed yesterday. And so that was, so if you stayed in, you got slaughtered on this one. So this is one to basically just take your nickel. In other words, this was a solid 8-9% profit spike, and definitely different than what the market expected. And so we think that this was probably a really good trade for everyone, especially when our data suggests it's going to go against the market. I love those. Those give me the highest potential confidence. So those of you that are actual real traders out there, when you get a jump report and you're doing your own personal research and you see that the market shows that it's exactly the opposite of what our jump reports say, if I were you, I'd have more confidence in our jump reports than I would in what the other analysts are saying. So when somebody says that Goldman is saying this or J.P. Morgan is saying that, I love that stuff. If they're against the direction that we're suggesting, that gives me even much greater confidence generally. So not what the normal professionals like to hear, but that's kind of one of my little metrics that I use to trade with. So this one here, APOG, was an interesting trade. It was a loss for us, but not a huge loss, and let me tell you why. So we had this as a short move, and so we went in somewhere right around in here. It popped up about 5.5–6%. This was just immediately after market. They did beat on both the top and the bottom line, and I guess they had even record sales. But as you can see, it still dipped. And if you look at the history of this company, generally in their past, when they actually meet or beat on expectations, which is something we do take a look at, the stock doesn't necessarily pop. And oftentimes there's other factors involved in the reason why investors will buy into this one. And so you can see that it went down steadily pre-market or after the market opened today, and ended up just right about where we bought it at. So this, if you stayed in it, you probably broke even. If you got out any place right around here, or if you got stopped out and you had your 5% stop, you probably got taken out after market somewhere in here or perhaps here. So this was actually our only real solid loser for the week, and let me show you why. Let's go into. So that was the fourth. We did actually 6 trades this week. So let me move the window around here. Let me see if you can see the. Let me change the window. Hang on just a second. Yeah, I don't know. Can you see the other window? Okay, so these are the other 2 trades. Hopefully you can see the window. I can't see it, so hopefully you can see it. If somebody can indicate, you should be able to see Walgreen Boot Alliance, and we have SHLM, which we did the day before. These are the other 2 trades. So on Monday, I believe Walgreens was a BMO, a before market open trade on Tuesday, which means you would have had to have entered your position on Monday afternoon at or around market close. So this is an interesting one as well, only because they hang on a second. Only because they had a solid beat, even though we showed them as a short move, and we felt that the reason for that were a number of other metrics, as well as our trajectory analysis based on the fact that they were in acquisition mode of Rite Aid and some other factors. And you can see we were right. So if you shorted this puppy right around 87, 86 and change, you would have gotten your 5% right about there, right in the AM. It actually kind of was a wimpy, slow trade right in here, but it did hit our 5% early morning the next day. So that was not a huge event in and of itself, but as you can see, it kept going. So those of you that are multi-day traders, and again, most stock jumpers are not, and it's not something that we advise, but had you stayed in, this one went down at least 10% from where it was at from the opening on that one. So that was kind of an interesting one, only because the metrics were good. But as you can see, it was at a high, and it never followed that pattern. And our trajectory analysis was spot on this one. This trade was interesting because this company, which is a heavy industrial company that's involved in, I guess, the plastics business, you can see that right after market close, it popped for about a 6, 7, 8%. The total jump zone value was over 9%. That was in aftermarket, but then the next day it lost all of that value, even though I believe they beat on both the bottom and the top line as well. And you can see that it lost all of it and closed much, much lower than what we started at the following day, and then it retraced and came back up again. Obviously what we care about is really this area right here, the aftermarket pop, and whether or not we're going to get at least our nickel out of this. And for those of you that are more conservative, just grab your 5%, which would have been right in here on something like this, and you move on and call it a day. There's so many opportunities. There's so many of these that we're doing. And just as a comment, right now we're at the very end of earnings season. So this week was pretty much the last week for this quarter's earnings season, and then next week we start up again. And over the next 30 days, there are literally hundreds and hundreds that we'll have to choose from. And so we'll be able to cherry pick some of the better ones with the better volatility and the better jump zones. And so our performance should improve dramatically in the next 30 to 45 days or so. So any questions? That was basically our week in review. We only had 6 jumps this week, which actually, believe it or not, is a very comfortable amount to work with. We can spend more time with 6 than we can with 8. For most traders, this is more than enough food to work with. So normally we try to get between 5 and 8 jumps a week as a minimum. The 6 arena seems very comfortable to work with for most traders from a trade allocation standpoint. And also working the aftermarket closers, for those of you that are paying attention to this, when the ones that are aftermarket seem to perform better than the ones that are before market opens. The reason for that is because there's more attention, there's more eyeballs looking at it, other than the huge ones that have tremendous volatility that are pre-market releases. We prefer aftermarket closes, and about 80% of the jump reports that we publish are biased toward aftermarket releases. Okay, so that's our week in review. Hopefully you guys traded this, at least 4 of these, and hopefully everyone made money this week. We certainly did. And if there's any questions, I'll be happy to answer them, and I'll stay as long as I need to for those of you that have questions. And if you need to ask a question, you need to type it in. So you can't talk it. You have to actually type it into your computer in the little chat box up there. Anything? Anybody have any questions? I don't see anything. Okay, well, I want to thank you for coming. And for those of you that are participating in the trade room, I think there's some tremendous value there because you have an opportunity to actually watch the action live. You can ask questions. I'm happy to share with you what my trading program is and my logic pattern of why I stay out of some and why I go to others. The ones that I particularly favor for options trades and that sort of thing. So for those of you that have the time and either want to trade full time or you're really into this, I highly recommend that you come in the trade room. It's only available for pros. Any of the other membership plans or non-paid or non-premium membership plans, it's really not for you. But if you really want to look at how to eke more profit out of one of these trades, I highly recommend that you attend our trade room sessions. So without further ado then, I will say goodbye for the weekend and hope everyone has a good weekend. And I think we're scheduled for 7 next week. Check your upcoming page on your jump reports and take a look at what we've got coming, and definitely plan for those. There's a couple of those that will have huge volatility attached, and even though we really only had one Ruby Tuesday-like thing this week that moved 15%, I see some upcoming ones that are going to be huge, like in the 20% plus range. So anyway, again, thanks for coming, and I wish you well, and I'll see you on the next jump.